Hey, welcome to CZVERSE. We break down the technologies rewriting the rules of the global economy. AI, crypto, quantum computing, robotics. Real analysis, real consequences, explained like a human being. Let's get into today's story. Western Union is a 175-year-old pillar of the global financial system. If you or your parents ever needed to send money to family in another country, you know the name. The scale of their operation is significant. They serve roughly 200 million customers, moving more than $400 billion a year through 500,000 physical agent locations spread across 200 countries. But that network runs on aging plumbing. Customers routinely pay fees between 5 and 15%, and settlement can take days. That specific friction has allowed fintech apps like Remitly and Wise to steadily siphon away Western Union's market share. This week, Western Union responded. They announced the launch of their own stablecoin called USDPT directly on the Solana blockchain. They are choosing to replace their legacy settlement infrastructure with blockchain-based rails. It is a survival tactic designed to fix their margins before the existing model becomes too expensive to maintain. Let's look at the mechanics. USDPT stands for US Dollar Payment Token, and it is backed by cash and US Treasury securities. It functions as a dedicated institutional settlement tool designed specifically for moving funds between agent locations. In traditional cross-border flows, when a customer in country A sends cash to country B, the settlement hops through a complex web of intermediary correspondent banks. Watch the middle layer. Solana replaces these intermediaries, settling directly between endpoints in seconds. For the person sending or receiving the money, the experience stays the same. You hand local currency to the agent, and your relative picks up local currency on the other side. The blockchain operates as invisible infrastructure underneath. When you achieve settlement efficiencies at a $400 billion scale, the economic impact is clear. Western Union can now choose to either increase its own margins or lower customer fees to compete more aggressively with fintech rivals. While USDPT handles the back-end settlement, Western Union is also launching a consumer-facing companion product called the Stable Card. This is a debit card, but because it holds stablecoin balances, it unlocks new programmable features. Users can earn yield on balances through approved decentralized finance integrations and set up automatic currency conversions. For Western Union, this keeps transaction data and financial needs within their ecosystem. For the network, distributing this card to even a fraction of Western Union's 200 million customers would onboard millions of active users to Solana. The decision of where to build this was deliberate. They bypassed Ethereum to avoid the complexity of fragmented Layer 2 networks and avoided private chains because siloed networks lack the liquidity of a public market. They required high transaction throughput at low cost. Solana offers that performance headroom, and its ongoing transition toward quantum resistance provides the long-term security required by a global financial institution. By choosing a public permissionless network over a closed system, Western Union is signaling a departure from the private, siloed models that have dominated institutional finance for decades. Zooming out, this shift places structural pressure on the SWIFT network. The messaging system that banks have relied on for decades faces a direct alternative as its largest customers begin routing settlement around it. The economic impact is most visible in emerging markets. In countries like the Philippines or Nigeria, where foreign remittances make up a large portion of the GDP, reducing transaction fees ensures more money reaches the local economy. But that efficiency creates geopolitical complications. When citizens in nations with struggling fiat currencies can easily hold and spend a digital US dollar, it leads to effective dollarization, a move that often triggers regulatory pushback from local governments. The operational risks are significant. Rolling out a new financial instrument across 500,000 agent locations while navigating the regulations of 200 separate countries is a massive undertaking. Furthermore, any doubt regarding the reserves backing USDPT could disrupt the entire product. While the technical shift toward these rails is clear, the success of Western Union's specific execution depends entirely on how they manage this rollout over the next 2 years. This timeline maps expectations for the immediate future. Between 2026 and 2028, competitive pressure forces other major transfer services to launch stablecoin products. As we approach 2030, stablecoin volume crosses above traditional banking transfers. relegating legacy infrastructure to a secondary, expensive backup. Western Union's shift to Solana suggests that even the oldest players in finance are now forced to rethink the costs of their core infrastructure. Thank you for watching. If you learned something, hit the like button. Drop a comment below. Will PayPal, Circle, or Western Union win the global stablecoin race? Next time, we are looking at a major announcement out of Harvard. A leading researcher just confirmed that fault-tolerant quantum computing is arriving 10 years ahead of previous projections. We will explain exactly why that matters. This is CZVERSE. I'll see you in the next one.